Hey, Suffield, Connecticut homeowner, is the market shifting to favor buyers? The headlines are heating up, but what does that mean for us here in Suffield, Connecticut? Let's take a look at what national experts are predicting for the rest of 2025 and how our local market tells a very different story. In this month's Suffield, Connecticut Housing Market Update. I'm Stephanie Salerno, your local real estate expert and team lead of the Stephanie Salerno team here at Coldwell Banker Realty right in Suffield. Each month, I break down exactly what's happening in the market, and if you're a homeowner trying to make sense of the latest market news, you're not alone. There's a lot of talk about a national shift heading toward a buyer's market, but today I'm breaking down just what's happening across the country and actually what it means for us here in the Northeast, especially in our local community. So first, let's take a look at what's been happening in Suffield. For Suffield, for June, 12 homes sold, and that's actually flat from June of 2024. 13 new listings came on the market, and that's up 44%. The sales price to list price ratio was 102.4%, and that's down 2%. And the average sale price per square foot was $244, and that's up 8% from June of 2024. June's single-family home price average was $621,000, and that's up 17% from 2024. And the average days on market was 21, and that's actually down 71% from 2024. June's month supply of inventory was 2.08 months, and that's down 19% from June of 24, and a little bit up from 1.9 months in May of 2025. Now, how that works, and you've heard me say it a million times, 6 months is considered a balanced market. So anything more than 6 months is a buyer's market, anything less than 6 months is a seller market. So despite what headlines say, Suffield, Connecticut is still very much in a seller's market at just 2.08 months inventory. Okay, so as we sit here, we're in July, so we're officially halfway through 2025, which I can't believe. So let's talk about what forecasters are predicting for the rest of the year. Let's dive in and start with one of the biggest headlines. New home construction is cooling down. According to Robert Dietz, chief economist of the National Association of Home Builders, he says that given the current market conditions, the home builder trade group is forecasting a decline in single-family starts across 2025. And we're already seeing this play out in the data. New home starts peaked earlier this year and have dropped steadily since February. This means fewer new home builds are coming online. And while that may reduce future inventory nationwide, it hasn't really seemed to impact local inventory here in Suffield and in the Northeast. Why? Our local area is not seeing a surge in new developments like we're seeing in the Sun Belt or the Midwest. New construction is limited here, and that is keeping our inventory tight. Now let's talk sales. Nationally, existing home sales are projected to tick up slightly from 2024, but still remain historically low. All major forecasts, NAR, MBA, Wells Fargo, are hovering just above 4.1 million existing home sales for 2025. That's better than 2024, but still below where you'd expect to be if we were in a balanced market. And again, that's a national story. In Suffield and in many towns across the Northeast, inventory remains low. And as we saw before with Suffield's single-family home inventory being at just 2.08 months, homes that are priced right are moving. We're not seeing that kind of slowdown in Suffield and Northeast that other markets are experiencing. So what's driving this hesitation? Well, I'll say mortgage rates. And the experts are aligned. Rates are staying in the 6% range for the foreseeable future. Fannie Mae, MBA, and Wells Fargo all forecast rates to hover solidly in the mid to upper 6% range through 2025. That means affordability will continue to be a challenge for many buyers. As James Egan from Morgan Stanley puts it, looking ahead through the rest of the year and into 2026, we don't expect mortgage rates to come down much, at least not through the third quarter of 2025. So affordability will remain pressured. But here's the thing. Our buyers are adapting and normalizing to rate. They need to make a move, and many buyers are just not putting their plans on hold any longer. And we're seeing a lot of people get creative, buy downs, ARMs, and lender incentives. Plus, many local buyers are equity rich, which we talked about in previous Suffield, Connecticut market updates, and they are less sensitive to rate. With higher rates and more listings in some regions, the tone on pricing and appreciation is getting a little more cautious. If you look at the 2025 forecasters right here, we've got 8 forecasters that have updated what they're saying about 2025 home prices. This is as of the 2nd of July average, 1.9%. Two are falling the negative that they're reporting right now, which is Redfin and Zillow, and the others are somewhere between 2 and 3% home price appreciation. Now again, I think that's a fair look, and it certainly will be different market to market. And Mike Simonson says, the vibes for home prices are growing much more bearish. For the rest of 2025, we can see that inventory levels, especially in the Sun Belt, are now sufficient to put downward pressure on home prices. This seems likely to continue and spread to more states. However, there isn't much in the data that shows significant price declines. If you take a look here, it shows where forecasters started in the year to where they are now. We see them getting a little less optimistic. As Mike Simonson said, they're getting more bearish. Fannie Mae started out 3.6, they've actually risen to 4.1. But if you see the areas in gray, those are the forecasters that have fallen. Some have moved up, but the majority have gone down in their forecasts for home price appreciation. Now, Greg McBride echoes this, saying home price appreciation will be tepid when looked at from 35,000 feet, with many markets seeing little or no change in prices. But rising inventory has some formerly hot real estate markets shifting from a seller's market to a buyer's market and will be susceptible to price declines. And as I mentioned earlier, a lot of that is due to mortgage rates. But again, that's not what we're seeing in our local market in Suffield. Our inventory is still extremely limited. The demand is steady and prices are holding firm. Many areas and price ranges are still seeing multiple offers in the first weekend on the market, especially for homes that are under $500,000 or homes that are turnkey. Even with fewer home builds, forecasts still show new home sales will largely remain unchanged from last year. That's important because new construction often acts as a relief valve for tight inventory. Without that pressure release, resale homes will continue to play a key role, especially here in the Northeast, where new builds are scarce. Okay, Suffield homeowner, so what does that mean for you? Well, here's the bottom line. National headlines may sound gloomy, but they're not telling the full story. In Suffield, inventory remains tight, homes are still selling, and demand is steady. Buyers are more rate conscious, yes, but they're still buying. And we aren't seeing price declines like we're seeing in other regions. So if you're a homeowner thinking of selling, don't let the headlines put your plans on hold. Real estate is a local business, and our local market is trending exactly against what the national headlines are trying to tell you. So if you want to see what your home is worth today, or if you're considering making a move, I'd love to help you understand your options. And if you're just curious for a quick home value of what your home might be worth, click that link below for an instant home value opinion. Please do me a favor and like this video, share with a friend that might be considering making a move, or subscribe for more future updates. And all right, this is Stephanie Salerno with the Stephanie Salerno team at Coldwell Banker Realty. Thanks for watching your July 2025 market update, and we'll see you next month. Enjoy summer.